Hey everyone, end of the week. I just wanted to drop a video, talk a little bit about markets and positions that we have on. It was a really, really good day. Some really interesting things going on. Of course, we've been doing this. The markets have been rallying in the face of very high nervousness levels, very high VIX futures. The VIX futures curve really in a shape that is very concerning, right? And even after that CPI number. So very interesting what's going on. Of course, the VIX is picking up some of that election period as well, because it picks up between sort of 23-ish and 37 days ahead of time, picks up volatility levels in the S&P out that far. So it's predicting, what's going to happen in that period. So we're still picking up a little bit of that election period. That's going to start to drop away, but we may still price a little bit high based on what happens on the election and maybe any lingering effect from any sort of shenanigans, or we don't know what's going to happen surrounding that election depending on who wins, et cetera, et cetera. And there just is this sort of general bid to volatility lately. It's gigantic. I showed it in my video from yesterday. It's huge for this particular event. The election is massive compared to almost all other events. Remember, FOMC was the biggest FOMC in years, and there were some other numbers, CPI and some jobs numbers, NFP numbers. We've had some incredibly anticipated numbers in the last couple of months, in the last month and a half in particular, yet this election is commanding an incredible amount of premium, of risk premium, of you could call it fear levels. And so we're seeing this incredible climbing the wall of worry. I keep calling that. It's one of my favorite sayings, climbing the wall of worry. I mean, the worry is there, but tell that to stocks because they just keep making highs day after day. So we can look at the S&P again making all-time highs. Look at that march up on the SPY from 566-ish. Remember we sold off kind of a few days ago, and then we've just kind of marched up since, right through quite a bit of gamma actually. So gamma levels are always good to watch, but if there's a fair bit of organic buying or selling in a market, it's going to overcome a lot of those levels. Now if they're massive like that JPM collar at 5750, that can provide a little bit more resistance, but we're kind of slicing through a lot of resistance right now. Let's take a look at we'll take a look at the QQQ. A little bit more hesitant, right? We're having a little trouble breaking through this level from a few weeks ago, and that's interesting. We're sort of rotating into some other things. Nvidia took just a little bit of a break the last couple of days. It hasn't really sold off, but it has taken a little bit of a break. Microsoft has been incredibly unwilling to participate in this rally lately. It kind of had a run to 420, and it's really been kind of sitting around that 415 level. Let's take a look here. Yeah, look at that. We've come off from sort of mid-September levels, and even though the rest of the market is rallying, we don't have the great AI software operating system general that is Microsoft participating. So that's a very interesting sign. It may be no more than people are just rotating into some other things. We've seen many other sectors benefit ever since I mentioned a couple of months ago, look, don't miss out on everything happening around you. I said, look around. I said it on Twitter and newsletters everywhere. I said, this is a big world. Don't forget that there are other things going on. And sure enough, we've had many other things happen in the meantime. So a lot of strength in many, many areas. So, another stock that I've been liking lately, Amazon, starting to act better. Of course, it's not making new highs like the S&P, and certainly it's kind of following a little bit more of the NASDAQ path. It's consumer discretionary, right? So it's not pure tech, but I think everybody thinks of Amazon as technology. It's cloud. It's massive online consumerism. So, but it's having a nice little run here. We had a bounce. We had a pull back into here. We had an amazing risk reversal. Bought it at something like 35 cents. Sold it at 5.88 in this last run. So we sold it out. Came back down here. Sold some puts. Then put on another risk reversal, which is selling some downside to finance some upside. Also sold some extra puts, which I covered yesterday. So I even though I love the stock, I bought back the strictly short put, cash secured put position for a nice gain only because I have the risk reversal on again that we put on down around 182. So that is once again looking like it could be another home run as it was in this period here. And quite frankly, I think Amazon's got 200 written all over it. Fantastic stock, good valuation, taking advantage of artificial intelligence, monetizing it in ways that only really not many companies can do right now, right? Meta, which is another one I've loved, it's gone from 450 to 600. I've been pounding the table about Meta in the Discord room and everywhere else. People will care to hear from me. So I've been talking about that one. I haven't been talking about Amazon as much, but I put out a video a few weeks ago saying this is a very, very interesting looking stock. So another great one there. NVIDIA, I mentioned a moment ago. So this one's looking really good. I mean, I think it makes new highs, and I think the SMH, Samantha Leduc's been talking about that 270 level. I'm kind of on board with that. I think, I don't think NVIDIA is expensive. I think it's still, from what I'm hearing, from what we're hearing from other companies, they just cannot make enough chips for people. I mean, there is a frenzy to get what they sell. They are crack dealers and they cannot make enough crack right now. So they're just having a fantastic time in business and with massive, massive profit margins. And it doesn't trade that expensive. It really isn't overly expensive. So, there have been periods this year where I thought, they're going to overdo it on the AI side, on the CapEx side. So I have thrown in a little bit of doubt here and there. But look at this thing. And if we draw this trend line across here, I mean, wow. That is pretty compelling. We just blasted through this line here. Maybe, maybe we pull back into that 125 level. That wouldn't surprise me. I mean, there's something stinky going on in the vol space. Maybe we get a little sell-off here somewhere. Ultimately we're going to 6,000, I believe, on the S&P. I've been saying that since 5,100 on August 5th. I've been saying we're going back to 6,000. We're going to 6,000. So anyway, we could pull back a little bit here. Interesting, but on the Leduc show this week, I showed that, and I think I mentioned it yesterday in my video, there are interesting structures out there, right? The downside is very steep on a lot of products. If you look at NVIDIA, very steep downside, very unusual skew going on. They've forgotten about the upside. That's happening in a lot of different products. And so what I've said to people is when everyone is looking left, make sure you take a look to the right? When everyone's looking at the left tail, take a look at the right tail. The right tail is the risk of things melting up. And we started to really see that last couple days, today especially, melt up. Right? So it's been a fantastic time to disregard the fear levels and to really say things are pretty good in the economy. Yes, they're not going to cut rates probably quite as much, but we get a little bit of inflation. We get fantastic growth. The consumer is healthy. Debt levels are pretty high, but asset prices are high. Stock markets are high. Home equity is absolutely massive compared to 4 or 5 years ago. People have a lot of money in their pockets. They have a lot of money sitting there in equity. Yes, there is a segment of the population that is struggling. But in terms of what drives profits for a lot of companies, outside of Walmart's and things like that, although Walmart's doing fantastic, right? They're eating the dollar store's lunches. The dollar stores just have no idea what to do. Walmart is doing fantastic, but everyone else, because a lot of spenders are still out there spending. Restaurants are full. Travel data is fantastic. People are taking trips. I keep hearing about from friends, we're going to take another trip. We're going to take a trip to Europe. We have a couple that we know. They said they're going to take their whole family down to Nashville to see Morgan Wallen or something like that. They're going to go down for a day. Imagine what that costs. They're going to fly down. They're going to pay for 5 of them. No, sorry, it was 4 of them. They're going to pay for 4 people to fly down to somewhere that isn't even a hub like Chicago. You're not going to get a great deal going to Charlotte or something. I don't know. So it was like a strange town like that. They're going to go to a Morgan Wallen concert, which is probably not cheap in itself. They're going to pay for hotels. They're going to pay for meals, all this stuff. These people they don't seem that well off to me. They don't have phenomenal jobs. This guy isn't a CEO of some company, but they are spending this money. People are spending money. I don't know what this is. It's YOLO. It's FOMO. It's you can put together 4 letters that make sense to you, and that's what it is. It's really unbelievable these days. Here we've got Tesla. Of course, they had the big event last night, which apparently was a bit of a yawn fest. They really didn't say much from what I heard. Really, really underwhelming performance. Some people saying no idea why they even called this event, why they even created this event. And so, of course, today you just had this massive boom. So we had an upside calendar financed by a 210 put sale in October. So we've got the structure on that was going to give us basically a lot of nice upside in case this was really, really good, selling sort of a near term, buying that next one, interesting structure in there, and then financed by the 210. So we're going to be at 210, we're going to start facing potentially having to own Tesla. I don't mind that. As long as it's kind of above 200, above this 200 day, I think it's going to serve as a really nice wheel. We did see implied volatility come down. Let's take a look here. Yeah, there we go. So we had implied volatility come down. We were pretty high up there, 76% ranking percentile. We're coming down a little bit, but I think that vol's still pretty juicy. So let's see what happens. I think the vol probably hangs in there a little bit because we've got earnings coming up, a lot of things happening. Going to have to watch that position. It's not in trouble at all, and it's a stock I didn't want to own at 270, but I don't mind owning around 200. So I'm not at all panicking about that particular position. I want to show you another interesting one, Palo Alto. What a position this has been. So this is something that we got into in the community. Again, this is the Discord community that you can get into if you're interested. Let's take a look at it on here. So what a move these cybersecurity companies have had. We've seen it in Crowd, we've saw it in Fortinet. I have a whole bunch of Fortinet in one of my accounts doing fantastic. Really, it's the quiet one. It didn't do anything as these other Palo Altos and Crowds did really well. The Fortinet was kind of forgotten. So it was frustrating, but it's really, really bounced back. But today we're going to talk about Palo Alto. It's had a little bit of a run, right? You have to be prepared for volatility with this one. I mean, look at that. Boom, down here, massive disappointment. Then Pelosi got in, and then everyone went crazy again, and then it pulled back, and it's sort of been, bouncing around, but it's starting to make a very, very strong move. I think it's basically part of it. I mean, there are other things happening, but I think part of it is the world is not getting any safer, and these companies are going to have incredible revenue streams. I thought Palo Alto might have a little bit of an advantage over Crowd after the big debacle with CrowdStrike, but CrowdStrike has really bounced back as well. So I don't know. It's a bit of a two-horse race at this point, and I really like this one. So we own this one. We bought it at 320. I did some covered calls on the last earnings, so captured about $8 or $9. So I've been doing some covered calls, but at this point, just own the stock, right? And so this is what being a covered call seller and an option trader is really about. If you want to do it well, you have to learn to be able to pivot from one situation to another. Basically, there are times where you want to sell calls, and there are times where you just want to get the heck out of the way, right? So I say that in my programs. I say there are times where the market wants to do the work for you, and there are times where the stock or the index is struggling, and you want to add value via option selling. Right now, I owned it. I bought some puts. It got down to 230. I bought some puts for about $4 or $5. Just for that extra little bit of protection, just bounce back strongly. Today, because we came back to this level, I sold some cover calls, right? So I basically, if you take out the $5 I spent on the put and the other $8 or $9 I made on some other cover calls, I'm into this stock for about 317. So 317 to 373. Now I'm selling some calls in November for about $7, I think it was. I'm going to watch those very carefully because if it wants to go and now start breaking that 380, 385 level, I may have to roll those up or cover them altogether. But right now, it's been an unbelievable trade from about 317 to 373. Incredible trade. So sometimes being a good option trader is not trading an option. Being a good option seller is knowing when to not sell an option. So hopefully that makes sense to you guys. Part of what informed me on this is we've got the MTI indicator that we teach in the programs and that students use is you've got this sort of green, yellow, red situation. Now, the extra red here is coming from the volatility aspect of this market, very high vol levels. But In a stock like this, I'm backing out that vol space. So really Palo Alto is more like a 4 green, 5 green, which is very positive. It's actually a 5 green if you take out the VIX aspect. And in my mind, the VIX is kind of, I don't know if you could say it's artificially inflated, but it isn't making sense. With markets at all-time highs, you don't have a 20 VIX typically. Now that might mean something's brewing below the surface, and something might be about to happen. It's kind of interesting how markets know when something's about to happen. But in my mind, it's about the election. It's about some uncertainty, maybe about some inflationary potential out there. A couple of other factors that we've seen lately. Of course, the Iran-Israel war. Potentially escalating, but this is something that's informed me too. You start to see this breakout here combined with what really is a 5 green. If you add back the -2 from the volatility metric here, which tries to keep us out of trouble, this has been very positive. So I just stayed out of it. I didn't want to sell cover calls. It's looking too good, and up we went. Okay, this last one I want to talk about, and I might do another video this weekend to talk about the rest of them after that, because there have been a lot of interesting positions, interesting things going on despite very low realized volatility, which is basically just actual movement from the market. It hasn't been that crazy, right? We've had maybe an 8, 9 realized, very, very low, but there have been pockets of very interesting things happening. So I'm pointing out a few from our portfolio. Our portfolio is quite elaborate. There's all kinds of things going on. We don't just do cover calls, cash secured puts. We do things like this. So this is a trade where MSTR, I called this very early when we came down from, I put out a video on this trade. I know I keep talking about it and flexing on this one, but basically we broke out, we went. I took a 226% profit. I'm irritated because it could have been a 400% profit. Oh well. It's tough to be truly irritated with that, but I am, because I really felt like this had more potential. Anyway, but the overall market was kind of iffy, so that unfortunately that's the way it goes sometimes. But good trade. And then what I did was when it got around 175, I put on a 1x2 put spread. Now what that is, it's called a ratio spread. It's also called a front spread. So you're buying a near-term put into the downside version. You're buying a near-term put and you're selling 2 further out of the money, right? So some people do this on like S&P, on index, because you get that really juicy skew. So skew is very nice thing to have in your favor. Steep skew is going to work better for these 1x2s. And a lot of people will do them when a stock is really low. I kind of like them after they have a run on a very strong stock. And I'll tell you why. When you do them on the low, it's nice because you're taking advantage often of very high volatility levels and often very high skew levels. So nice way of creating something for a credit that is going to make money if it bounces and is potentially going to make money if it drifts down just a little bit more. So I get that. I like those two. But on the way up, what can happen is you get into a 1x2 on the way up on a stock that's quite strong. You can either play for 3 different things. Let me tell you what they are. And I'm going to, hold on, let me just write this out for you. Okay, so what I did was MSTR, I bought the 176 put one time, and I sold the 162 put 2 times. So what you're doing is you're buying that closer put and you're selling that second one. This one I bought for $13.50, and these ones I sold for $705. So what am I getting here? Well, this one I'm spending $13.50, and this one I'm getting $14.10, right? Because 2 times $705 is $14.10. So what am I getting for this whole package? Well, I've spent $13.50, I'm getting $14.10, so I get 60 cents. Boom. So what happens is, I'll do a deeper video on this because I want to show you the P&L on my platform. But basically what happens is you have 3 outcomes here. You can either, you're beholden to owning this thing below a certain level, but what the spread does when you do the 1x2 is it gives you about twice the difference if you put this on for about even money, which I did it for a bit of a credit, so it's a little better than it looks. But you tend to get the break even tends to be the 176 minus 162, double that. So that gets you down to about 147, right? Does that make sense? Is that good math? 146 for 148. So it gets you down to a cost price of about 148. less the credit, so that gets me down to about 147.5. So worst case scenario is I own MSTR by October expiry at 147.5, which happens to be right around this 50-day. It happens to be sort of the midway point of this entire run here, so 50% retracement, which is okay. So I'm thinking that's not a bad level to be in. It's not too far from that 200-day. This stock is not for the faint of heart, but you know, you can kind of find some spots there that make sense. And I kind of like that 147 level. So number one, you might end up buying at 147 if this thing craters again. Number two, you can make a whole bunch of money between 176 and 162 and 147. Right in the fat of that, around 162, you can make a ton of money. These things act like butterflies basically right in the middle. And you have this beautiful, beautiful tent structure. So around 160, 162, you're going to make a ton of money. And you'll make money between 175, let's say, and 148. You're going to make varying degrees of money there. Now, what happens is, if this thing keeps going, which it has, and this is kind of one of my favorite ways to play it, I don't like waiting for that slow drift. You just had a really strong move on a stock. Who's to say it's just going to kind of drift down slowly and just kind of stick to 162? Might happen, might not. So that's not what I'm playing for necessarily. What I like is when these things move away from you, and what happens is you're long that 176 put, you've got two 162 puts that are now, those are the wings. We call those the wings. They're way out, and the wings collapse. If anybody knows how a theta decay chart looks, it doesn't look like that. Whatever you have in your mind, it doesn't really look like that on an out of the money put. That's one of the things you're going to learn in a good program taught by a pro with 30 years of experience, is you're going to learn how theta decay actually works, because the common view is actually not quite correct. So the wings are really, really going to collapse at a certain point if you're doing them with a certain number of DTE, number of days till expiry. So what happens is they collapse as the stock goes up. You buy back those puts, which I did today. I bought those back at 51 cents. So I sold them at 13.50. I sold them at 7. I bought them back at 51 cents, right? So I made a whole bunch of money there. Now I'm just long the 1350s, I'm long the 176 puts, basically for free. So now I have this, we're going into a very, very ridiculous, seasonally volatile time of the year. It's a week where anything can happen. And now I've basically got these free puts to the downside. If for some reason they may go to waste, but if for some reason, if MSTR craters down to 150, I'm going to make a fortune on this position, and it's barely going to cost me anything. Sure, it could cost me a little bit of margin up front to put this position on, but in terms of this ability to basically create very low cost or free downside puts, and maybe even to the upside if you do one of these to the upside, is I'll do those all day long. I mean, how many of those would you do? If I gave you like 10 trades that were almost a zero cost, might not kick in, but just one of them kicking in is going to make it all worth your time. So they don't always work out perfectly like that, but this is a really, really cool trade. It has pushed a little further than I wanted it to at 212. What a move it had today. It's pretty far from that strike at this point. I was kind of hoping it would hang around the 200 level, 195, 200, which would be sort of within striking distance. MSTR can move 20 bucks, no problem. So it's moved a little bit out of my range. Doesn't matter. I'm not going to lose much sleep over it. It's above this trend line here. So right now, if this position doesn't work out, fine. But if I see, and I have other Bitcoin minor positions on, which I'll talk about in my next video. But at this point, maybe we can pull back to that 180 level. Beautiful. Look at that touch that we had yesterday. We blasted through that line, came right back to that 180 level. I mean, absolutely textbook. That was the some puts, which I didn't do, but boy, what a beautiful touch of that line that was. So textbook stuff, and then it blasted off about 25 bucks today. So hopefully this gave you a little bit of insight into how I'm thinking about some of these positions, how I'm thinking about volatility, what's going on out there. I'm not balls to the wall long. I am in some of my investment accounts, but I'm not balls to the wall long in trading accounts because there's something weird brewing below the surface. But I am a believer in taking advantage of a lot of this negative skew, a lot of this positive extreme skew that we're seeing, and playing that upside, right? When everyone's looking left, take a look to the right. Doesn't mean that trade's going to work out, but I love to put on high value trades, which are cheap trades that take advantage of the skew that's out there. So right now people are ignoring the upside, and guess what's happening? We're moving to the upside, right? When you have so much negativity to one direction, things often move in the other direction. And usually those kinds of situations are to the upside, right? That downside skew, those out of the money puts just get overly negatively priced. And that means, where's the market going to go a lot of the time? Well, once everybody's negative, it can only go one way, which is usually to the up. So hopefully that gave you a little bit of vol insight and some neat ideas on trades. And we'll see you guys next time. I'm going to try to do something on Sunday, talk about CLSK and a couple other cool positions that we covered this week for nice gains. And you guys have a great weekend. Bye-bye.